Hey guys, this is Jeff, your swing trade warrior with warriortrading.com, back with our weekly video recap here. We're going to talk about some of the trades from the week, what I think about the market going forward, and what I'll be looking for. Get right into it here. We did close out a few trades this week. Now, volatility in the markets was a little higher, obviously, because of the election. So we weren't as active early in the week, pending election results. We knew that the market was going to be volatile. Had you been paying attention Tuesday evening, it looked like the markets were going to sell off to the point where they halted, and then by the time the market opened, everything was making new highs. So incredibly volatile swings. They were not unexpected, which is why we were sitting out instead of trying to guess a direction, right? We're traders, we're not guessers. So we stick with the high probability stuff. A couple of the trades that we had carried over until early in the week that we did close out. Let's see, we had NOC, Northrop Grumman. I always have trouble saying that name. Okay, this trade we got long using a bull call spread. Why did we use a bull call spread? Well, all the students in the swing trade course will know that we buy volatility when it's low, and we sell volatility when it's high, when we're trading with options, right? NOC is a $230 stock, right? So not a lot of people can afford to buy 1,000, 2,000 shares of the stock, or even 500 shares. So we're looking at a fairly large commitment with equity. But it is a nice trading stock. It's a nice trending stock, and it does have a lot of opportunity at certain levels. And this is, we're looking at this little area right here, this consolidation under this top. And so we used options because the power of leverage gave us the opportunity to trade this. Got long on this trade here back on, this was October 31st we jumped into this. And it would have been right here, okay? So you can see that the stock here is trading just below this big resistance top at 230, right? We have a nice little trend here. Earnings date back in late October. This thing gaps up after earnings, and it starts trading in a new range. And you can see that range here in the TAS box showing us from 230 down to 223. So we got long using a bull call spread because implied volatility was low, so it made sense. And we see this nice little tap here. And what ended up happening? Oh, market volatility kicked in. We're in the middle of a 9-day SPY sell-off, and this thing sold all the way off down, sold off all the way down to just above support, just above our exit. It did recover, and as the market started creeping, this thing ended up the day of the election closing just at basically a little higher than our entry. We got out of this trade for an 8% winner, and it was flat. Now, why did I exit this trade? Well, this was a bull call spread. It was $325 per spread. I did not want to hold this through the volatility of the election, so I closed this on the day of the election during that market session, and whatever was going to happen after that, I was going to have to miss because I am not I'm not a gambler. So if the results were bad, this thing would have sold off. Well, it turns out the results were favorable, and this thing gapped up, like 10, 12, 13 points here, running almost 20 points, which would have turned into a massive winner for us, probably a couple 100%. But unfortunately, we were out of the trade literally the day before this happened. I look at this and, part of me says, dang it, I missed a huge opportunity. But then the other part of me that's traded this type of stuff before during volatility has lost and seen a 20-point drop, and my option premiums go from $300 to $3 or whatever, and it's not something I'm interested in being a part of anymore. Remember, base hits win ball games, not home runs, but you will get home runs if you take enough swings. So we just keep swinging away, and this one, timing was just off, but overall we had the right idea. That was on NOC. Another trade I saw setting up was on IBB, which is the NASDAQ sector ETF for biotechnology. Let's see here. I saw a big support area being tested following a big 9-day market sell-off. The IBB has been selling off even longer than that. I ended up getting long on IBB on, let's see, 1102, which is right here. We ended up nailing the low of this move, okay? You know, why did I choose this area? Well, you can see it's a pretty significant area of support, right? If I zoom out a little bit, and all my students know, they hear me say it over and over again, previous support becomes future resistance, previous resistance will become future support. This is no different, okay? We're testing a very critical area here. The next spot below that, you can see would have been down here at 240 or so. But we ended up getting in ahead of this because the market had sold off for 9 days, and I was suspecting a reversal in the S&P, and you know, I mean, we ended up getting it. And so how did I trade this one? This is another $250, $240 stock, right? Didn't buy the stock. This time I used a bull put spread. What's a bull put spread? Like I said before, guys, you buy low implied volatility and you sell high implied volatility when you're trading options. Now, if you check the implied volatility for the IBB here, at the date of our entry, it was trading relatively high compared to its historical volatility. Why? Because it's in this big sell-off here. It's accelerating to the downside, a lot of volatility in the market, and for whatever reason, implied volatility was higher. Well, why is this important for us to know? Because instead of buying high when it's already high, knowing that it's going to drop or return to the mean, I want to sell the high IV, and that's what I did in this case. I ended up doing a bull put spread. If you guys have questions about what these option structures look like, they're very simple. And I have some of the sample orders set up on a page, warriortrading.com/options. And you can see just what a bull put spread looks like. Anyways, capitalizes on a move to the upside here, which you can see over the next few days we got promptly. With the election results coming up here, again, I closed this trade out on the 8th. Prior to this big move to the upside, because remember, just like NOC, we don't know what's going to happen. Could be a big move to the downside, and we're up 25% by this time. Took my profits and I ran. You know, generally my profit target for return is 30 to 50% for options. In this case, we got 25% on the day before it closed, before the election, and I was more than happy with that result there. So got out of that trade, took the money and ran. Same thing with the SPY here, same kind of thing, right? Here's this big 9-day sell-off. And then we have, see, we got long some SPY calls here on 11/02, the same day we put on the put spread, the bull put spread. Didn't quite time it right, but we ended up reversing here very shortly, and then we were able to sell this again on the 8th, election day, for another 25% win. All right, so this is just a simple reversal setup here, and you know, of course, if we would have held it to the upside, we could have had a much bigger winner, but we're not in the market of swinging for the fences. We're just happy taking our profits, consistently making money because we are traders, not gamblers. All right, one of the other trades I want to talk about is Priceline. This was the only earnings play from the week, and we did an iron condor. An iron condor is an earnings strategy that I use on stocks that have high implied volatility. Iron condor is consists of two credit spreads, a bear call and a bull put spread. If this is foreign to you, then you need to read up on your options or go to warriortrading.com/options. All right, so this type of trade seeks to capitalize on volatility crush, which is what happens after a volatile event. The volatility of the election and Trump becoming president saw the market dip down almost 1,000 points on the Dow, 800 points on the Dow, only to have it recover and open in the morning and close 300 or 400 points higher. You know, it's like a 1,200 or 1,300 point swing in about 12 hours in the market. That is absolutely massive volatility. All right, so the volatility in that case was caused by the election. Turns out the world didn't end when the results were announced, and therefore everything kind of resumed business as usual. Well, that means that volatility comes plummeting out, comes crashing out or crushing. That's what they call it, the crush, comes crashing out of the stock, and therefore once everything kind of normalizes, the inflated premium price that you would have paid for those options now becomes somewhat less valuable. And so we look to capitalize on that volatility crush. Well, the same thing happens around earnings events, because we know that earnings events can move a stock 30, 40, in the case of Priceline, 200 points. It can move 200 points in one day because of the earnings results. And when the buildup in the options premium pricing as that event nears increases exponentially, and then once the event happens, It's like a balloon, kind of pops, and everybody returns to normal there, and the premiums and those options aren't worth as much. So we got long, we opened an iron condor, which is a credit spread on 11/7. This was the day before the election. Now this is considered a neutral strategy. It seeks to profit when the stock price remains between the two short strikes of the two credit spreads. So we don't want a big move. We only want the move to be between the two strikes, the two short strikes. So we had, in this case, 1570, which is right about there, and 1350, which is right about here. All we needed to have a 100% winner on this trade is for Priceline to close between 1350 and 1570 by Friday's expiration. This was a weekly option trade, right? It expires every Friday. The weekly options expire when the market closes. So this one flirted with disaster a couple times here because the results were pretty good. It popped up. You could see it traded above our 1570 area, but we knew that we had a 66% chance of 100% profitability on this trade. Why do I say that? Well, you can profit in two out of 3 ways here for a credit spread to profit. One is if the option expires out of the money at expiration, you keep 100% of the premium that you received for selling that option. Two, or selling that credit spread. Two, it expires at the money and not in the money, and you keep 100% of the premium that you collected. The only way you can lose money on this trade is if it's by expiration, the stock price, or the options are in the money. Your short option is in the money, and it was not. You can see this closed at 1540 today, so we kept 100% of the premium on this trade. I actually closed this out at 5 cents just to remove the risk in case there was some late day market rally and this thing popped back up. I actually closed out my credit spread here for $5 just to protect myself, protect my gain. Still a 90% winner, but you could have held it and it would have ended up being 100%, even though it was against us. By 30 points at one point. So knowing the probabilities, understanding how these things work, kind of put us ahead of the curve. It can be scary. This was a small size trade. I never recommend using credit spreads with large size unless your risk appetite calls for it. So if you have questions about this type of trade, of course, warriortrading.com/options. And for anybody watching this, if you have questions about any of the trades I talked about here, you can email me, jeff@warriortrading.com. So looking forward, people have asked me, like, what do I think is going to happen with the market now that the election is over? You can see here that I think what's going to happen is we'll probably end up moving higher, at least in the short term. You can see we have a nice little top here, just under 220. The high, all-time high of the S&P SPY is $219.60, and we're trading at $216.42. It's only a few points away. I think that we test that level. Maybe we trade range bound until January after the Santa rally. Who knows what's going to happen? But I think we're in bullish territory here. I think that the markets are strong. They know what a Republican presidency means for them, and so the fact that we're looking at potentially raising interest rates and cutting a lot of government spending and all the things associated with the Republican presidency and how those affect the markets, mixed with the President-elect Trump's business policies, his ideas for business growth. There may be enough there to offset some of the risk or some of the concern that would push the market lower. Anyways, it doesn't really matter. It's all speculation. The point is, based on how the markets have reacted and how strong they've been with high relative volume, there's not a lot of fear at this time. That can change in a moment's notice. It can change as soon as he announces his tax plan, whatever. But for right now, I think we go higher and we at least test the 220 spot before Anything else after that, probably range bound until after January 1st or 20th when the inauguration takes place. So that's kind of what I think is going to happen, which is good. The volatility will be a little bit lower, so that will give us a little bit more normalcy in the markets, I hope. We'll see a little bit more consistency in our trading opportunities, the setups. You know, when you have the S&P selling off like this 9 days in a row right here, it makes it really hard to find a bullish chart setup that's not extended to the upside or, you know, gapping because of the result of earnings. Makes it kind of hard. And if you don't want to short something on the ninth, you know, down day of the market, knowing that the reversal risk is there, or knowing the volatility because of these events are out there, you know, it kind of makes it harder to find trades. We've still been doing it. We've taken 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7 trades in the month of November, and we are green on 7 of them, which is fantastic. But you know, we are almost halfway through the month here, and we did lose a little bit of time because of the election. So I'd like to pick that up compared to October, where we had about 25 swing trades or so. Again, out of those, I think only 3 of those were losers. So fantastic accuracy. Fantastic accuracy, but we definitely have been lacking opportunity to the same degree as in previous months. But going forward, I think we're going to be okay. So once again, any questions watching this on a playback, jeff@warriortrading.com. If you want to see the option strategies that I trade, check out warriortrading.com/options. Also, I don't just trade options. It's just because the market volatility lately has given us so many opportunities with the violent swings one way or the other. It's made more sense because they are much more higher probability than a lot of the stock trades. So we're not getting chopped out as much. We don't have to rely on momentum as much. So it's just about being flexible and adaptive, right? All right, guys. Everybody have a great weekend. It's a 17-minute long video, and I don't want to take up any more of your precious time. So we will see you all next week. Have a good one.